Okay, guys, I am live right now. I hope everything is okay. Hi, everybody. Hope everybody is okay and things are great. It is me, Andrew. I am here. So, yes, guys, I hope everybody is having a great Friday and I hope everybody is having a great time. It's Friday morning here in America. We have great weather and we are having a great time. So I hope everybody will have a good weekend going further. And yeah, I hope everybody is having a good time. And everybody, please let me know how you're feeling. Please drop something in the chat. Let me know what you think about the music. And we got the market bell going in 1 minute. Okay. So yeah, guys, I hope everything is okay and everybody is having a good time. So if there's anything that you need to know, please let me know. Drop in the chat and I can let you know what we want to talk about. So I hope you guys are good. So guys, we got the market bell open and let me drop the market bell. We are live. The US markets are open. Let me get my market bell noise. So yeah, we got our stock market. The US stock market is open and I hope you guys are having a great time. This is me, Andrew Scott Whitemore. Let's have a good session today and let's get things rolling. Okay, guys. So for today, we got a bunch of things that I want to talk to you about. And so, yes. Um, okay. So the bell just went. We got our market open. And if you guys, yep, there we go. Our map has just gone gray. So yeah, guys, let's just wait a few moments. We can check out some stock information. What are the markets happening? Fear is driving the market. We've had Dow Jones up 0.1%, S&P 500 0.2%, Nas up 0.3%. So we got stock pushing this market and things seem to be going good. Everything seems to be going in our favor. So yes, guys, I hope everybody has a great stream today. And I got some things that I want to talk to you about. So, hello everybody. Once again, my name is Andrew Scott Whitemore, and I just want to give some feedback from yesterday's sharing, and it was quite good. So today I'll continue sharing with you. All right. So let's get our S&P 500. Okay. So I'll continue discussing what we didn't finish yesterday, and then I'll talk about reasons behind our choice of the phased position building, our multi-account coordination, and our structured layered approach. So this is going to be good. But first, let me explain why we need to build positions in batches. All right. Okay, so you need to understand that we're dealing with small cap stocks. All right, we're dealing with small cap stocks, and you need to understand that with this characteristics, this includes low free float and low high sensitivity that is susceptible to manipulation by capital. So once is concentrated trading at a certain level, the order book will instantly surge, attacking the attention of major players and even triggering a counter trend from opposing positions. So that's also why when operating with POM, Sophia arranges 3 batches of order placements at different unit points, and the purpose is to disperse the trading and to conceal our layout. And this way we can complete the position without alerting the market. All right, without alerting the market. So I want to go to our Russell 2000. Okay, so this is one of the small cap stocks, which includes many companies, and it is a really good indicator for us investors that are trying to make a trend move. As we could see, we have been doing well. So yesterday on Thursday, we made a good trade and things have been going well. And this is a good indicator for us. And I love it if you guys are in it with me, in it with the group, and let's make a bunch of money. And secondly, why do we need multi-account coordination? Well, this is because our team has found in the past practical experience that whenever a large order is concentrated, capital enters the market. And here right now we got medium volume trading and capital will be soon coming in. All right, guys. So our Russell 2000 cash has been doing well since the past 2 weeks. So therefore we employ a multi-account. What I want to say is why do we need the multi-account coordination? It's because our team once again has found in the past practical experience that whenever a large order or concentrated capital enters the market, small cap stocks are very prone to abnormal order book movements and surge in volume, thus alerting major players or triggering short selling. So if we look at our Russell and if we look at our S&P, we got also a lot of volume coming in. And then if you go back to our Russell, we also got a lot of volume also coming in. Okay, so that means a lot, guys. That's very good for us. So therefore, we employ a multi-account, staggered timing, structure order placement approach, and breaking down a large transaction into a series of natural buying actions by a group of smaller accounts. So, while it may appear as hundreds of individuals are entering the market individually, it's actually just a unified trade, a coordinated strategy system behind the scenes. And this stimulates institutional trading using retail accounts to execute institutional level trading behavior. Okay, so yeah, guys, this is going to be very good. So why do we call this structured trading? Structured strategy involves the coordination of different accounts, different position sizes, and different entry rhythms. It's not about everybody doing the same thing, but rather than playing a specific role, that'll form our tactical structure. All right. So yeah, guys, if there's anything that you would like me to do, like me to check out, please let me know in the chats. All right, guys. And I hope everybody is having a good time. Everything is great. And yeah. So guys, so yes, guys. Okay. Okay, cool. So I just got some messages. Okay, cool. So let me carry on. So yeah, guys. Once again, good morning to everybody and welcome back to the Friday Masterclass. For those of you who have tuned in just a bit late, today is December 5th and we stand at the threshold of the next major trading window. Okay. So we have successfully executed our first discipline move of the month, a move that validated our entire structural blueprint. And today we engage in a comprehensive systems audit and prepare for the tactical groundwork. So yeah, guys, I hope that is great. And for the next phase of our December campaign. And once again, for everybody that has only joined now, my name is Andrew Scott Whitemore. My decades of fiduciary experience, honed in the highest level of the financial industry, demanding one singular thing from this platform: accountability in the system that produces the results. We are not a community of gamblers chasing fleeting luck. Okay, we're not here to find some luck. We want to make a lot of money together. We want to hit 15, 20, 30%, so that can make people and everybody excited. And we are disciplined collective of capital flow, and we audit our methods, not our feelings. Don't trade with feelings, guys. If you're going to be trading with feelings and emotions, that is usually when I see a lot of traders, retail traders, blowing their accounts, and that is not what we want to do. Because when we trade with our emotions, we usually go big in trades, or we close our positions too early, or we open up big positions in entries that we shouldn't be going into. Because when we trade with emotion, that is when things start to go south. We need to be calculated, and being calculated is really what is needed when we are going to put our mind and heart into trading together as a community. Okay, guys? So, this is what we need to do. We need to trade with discipline, hone our skills, and make sure that everything is going well. Okay. I'm just still waiting for this to update so I can give you guys some more information. And yeah, so the next hour and potentially more is dedicated to an in-depth methodical deconstruction of our strategy. If you are serious about achieving the sustainable returns of the professional market, every word of this analysis is non-negotiable for your understanding. Okay, guys? So yeah, let me just get some charts up and open so we can have them nicely. We're looking at the US dollar right now, and we can see that we currently got the descending triangle potentially moving, that if we touch over here, we could start seeing a push up in our dollar. Okay. And then if we go to our volatility index, we should also see the same thing. We can see the market is starting to get happy. It's starting to get green. And that is what we like to see. So usually when the volatility goes up, stocks will start coming down. But that is a good place for us to enter these markets. Okay, guys? So let's begin by grounding ourselves in the current reality of the market before, and let's dive into the intricate internal mechanics of our team structure and strategy. So I really need to stress this again, that our structure and strategy is really, really, really important, and I really want everybody to know this and figure it out, that if we can get these things going, we can start seeing 10, 20, 30% or even more. And this is going to be great for us and guys. So yeah, number one, a standard market analysis, navigating the year-end flow. All right, so we're going to focus deepening the analysis of indices to establish the structural tailwind for small cap plays. So the macro picture remains, guys, consistent with our pre-December analysis, but the velocity of capital flow is accelerating. All right. The market is currently consolidating, and after a burst of initial year-end buying, we must understand this environment deeply. We got to understand this deeply, guys. So I need to look at this also now at a macro view, so I can give you guys better information. We can see the market is consolidating. Price is starting to come back. We're starting to see a nice resistance over here. Market is, if it reaches into this resistance area and it holds there, that's when we know institution is coming in. So 3 structural tailwinds, and we are still squarely benefiting from the 3 structural forces of December, which provide a safety net for our tactical moves. And one of these is window dressing pressure. This is the predictable institutional scramble. Fund managers must finalize the performance metrics and by strategically bidding up winning positions. So we see a nice glide of volume. Okay. And this doesn't affect our small cap targets directly, but it creates a powerful, predictable structural floor under the major blue chip indices, and this prevents a catastrophic sell-off. Okay, so we want to prevent a catastrophic sell-off, because if it's not affecting our small cap targets directly, it does still create a powerful, predictable structural floor under the major blue chip indices. So another point that I want to talk about is tax loss reversal and the supply exhaustion. So the tax loss selling, which typically suppresses prices in November, is largely complete. So this systematic removal of supply sets the stage for rapid, almost vertical moves in small cap sectors, as there is virtually no resistance left on the sell side. Okay, so if we look at our 100, we can see this nice consolidating movement happening over here, and liquidity. So I want to talk about the liquidity compression. Let me see if I can go to our Russell. Okay, so the liquidity compression paradox. This is a double-edged sword. As desks thin out for the holidays, volatility increases. However, the positive side is that our disciplined, coordinated buying has a disproportionately large impact on price movement, allowing our team to capture trends with far greater efficiency. And this will analyze key index structure and the structural phase that we need to go into. Okay, so let's observe the S&P 500. Okay, the S&P 500 and the NAS 100 are both showing signs of a controlled pause, a controlled consolidation. So if you can look at our NAS 100, also we're seeing a nice consolidation and a nice pause. So the consolidation is not a sign of fear or risk. It is a necessary structural pause to absorb massive inflow of capital from the start of the month. So for our NAS, let me see if I can get NAS on our US 100. I got US 100 over here. Yep, that is going good. So if you guys can also see NDQ, QQQ. Okay. So if we got our downward trend line going over here. We got an upward trend line going over that side. Okay. And we see a nice consolidation and also trading at 25,699. So the NAS, as you know, guys, is extremely volatile, and this is not something that I want you guys to just chuck your money in and throw it in whenever you think it is good. Let's check out our FinViz, our financial visualization. Yeah, so we can see a lot of movement is happening in the market as of now. Things are green, things are red, things are things are in a consolidation area, in a consolidation space. So this will potentially mean that we are going to this is going to mean that we are going to have a sector rotation happening in the market for this time of the year. So let's look at volume. The selling volume. So the selling volume on these small pullbacks is consistently declining. Selling volume is consistently declining. You can see here we have it's consistently declining, and this is the shallow pullback standard. So standard one of our volatility structure is when the market retreats without corresponding high volume. When the market retreats without corresponding high volume, it signals that institutional sellers are absent. Okay. And the pullback is noise. The underlying flow is intact. You got that, guys? The pullback is noise and the underlying flow is intact. So this confirms that the structural health of the broad market is excellent. The structural health of the broad market is excellent, and it is a good time to get in. This high level stability is the green light that we need for our aggressive yet measured tactical operations in the small cap space. Alright. So yeah, guys, if there's anything else that you want me to know, if you want me to go through, please let me know. Alright. So guys, I hope everyone seems to understand this operational system correctly. However, even the best tactics needs execution and implementation. And I just want to go back to our team talk, our team strategy, what we have been going on about and talking about yesterday. And that is, this is our first collaboration with our followers. And this is the first real world test of this operational system. And if someone fails to execute it properly, then all strategies are meaningless. Alright. So guys, if you are part of the group, of the Telegram group, you know what we are doing. We're using a multi-account and we are pushing up stocks in our favor on something such as the Russell 2000. So we got a Russell over here. Okay. And if I can draw some lines for you guys, let's go a bit more out. Okay, yep. Let's see over here. We can also draw. We got a nice trend happening, and we got in at an excellent time. Got a nice ascending wedge happening. Let's see if I can move this. Yep, that is exactly where we want it. Let's move this one a little bit down here. Cool. And we can see, look at this churn, guys. This churn. A lot of churn happening. And a lot of information coming in. So, guys, this is why I've consistently emphasized operational discipline and a unified pace. And that is why we need coordinated teamwork, not individual efforts. And discipline is never meant to restrict us, but rather to guarantee that we all make big money. And the successful completion of this project has given my team and me tremendous confidence. And it demonstrates that our tactical system of phased position building, multi-account coordination, and a structural layout is feasible and profitable, guys. So this is a feasible approach that we're doing. It is structured, it is unified, and things are moving at a good pace and a good rhythm. And this is exactly what I need from everybody. So currently, the US stock market is still in a volatile range. So let's look at our volatility index. Okay, it's in a volatile range. And in the stock market, the advantage of inverse ETFs are not obvious, and the operational space is limited. As for options, because we have so many followers, a sudden rush in could easily lead to a stampede and loss of control, which is actually detrimental to the execution, if you know what I mean. So it could be really, really detrimental, and this is not what we would like to happen as of now. So, therefore, we will shift our focus to momentum trading in small cap stocks, continuing to use this approach, but deepening, refining, and developing a sense of rhythm in it. Okay, developing a sense of rhythm. Yep, we got a good measurement laid out here. Let's see if I can adjust this slightly more just to be more precise. And we can see we got a nice touch over there from our all-time high, and that is exactly when we had a churn, and when we had more volume coming in, we had a big sell-off volume, and we could see it was also dropping below our RSI, our relative strength index, and when it starts going below the average, that's when a big sell start happening, and when it goes above our average, that's when we see spikes to the buy. Okay, so here we could see things are going down, and here we see a surge again once it goes up of our relative strength index. So you could also see that over here, guys, we had a nice churn to the up. Over here we got it going down, up, and down again. So now it could actually potentially be a good buy position, but we already did that and we are already trading well, guys. So if there's anything else that you need to know, let me know. Okay. So yeah, guys, I hope you guys are doing good. I hope everything is okay and everything is fantastic. So guys, personally, I really enjoy options and inverse ETFs because these instruments offer rapid growth, high profits, and a strong sense of rhythm, and they are indeed very attractive. However, now that we have so many followers trading together, a stampede could cause problems, and we don't really want a stampede. So, furthermore, the recent surge in expectations for interest rate cuts, coupled with improved liquidity, has the greatest impact on small cap stocks, which is the key reason why we're focusing on them recently. And this is evident in the Russell 2000 chart. And while the VIX has stabilized and declined, and the S&P 500 has rebounded simultaneously. So yeah, we got a VIX. It is stabilized, and it also did decline, and the S&P 500 rebounded nicely. On the 1 hour, it smacked our resistance level, and the IWM has recently outperformed the PX and Nasdaq. Okay, so the IWM has recently outperformed the PX and Nasdaq. Okay, so yeah, guys, so my team and I have been closely monitoring several small cap stocks over the past few days, and our original plan was to guide everybody to the next target tomorrow. However, after reanalyzing the market and structure and fund flows today, we've determined that Monday would be the most suitable entry point. Okay, guys, Monday will be the most suitable entry point for us to get back into the market. Alright, I hope that makes sense. And once again, guys, patience is also the name of the game. We got to have patience, we got to be cool, we got to be clean, and we don't want to be caught out in a bad situation because it's Friday. Friday is also usually not a good day to be trading. And as we can see on the IWM, it's also going really high. Let's see, we saw a nice spike on our RSI. We're seeing a good amount of volume, and good things are coming through. So guys, Friday's market volatility is typical, quite chaotic. That is why I don't really want to enter and give you guys any false hope for now. And with institutions adjusting positions, funds balancing before the close, and a lot of sentiment driven market. So to avoid being influenced by this unnecessary noise, I prefer everyone to enter the market in an environment where liquidity is more realistic and trends are even closer to discern. Okay, and where trends are even closer to discern. So although we only traded one stock this week, everyone's pace was steady. I remained confident in achieving our December return target of 200%. So I hope everybody can remember that the 200% gains is what I am looking for everybody to get out of this positions. And I have been very frank with everyone this time. Our goal for December is simply to make money. Simply to make some money. I don't want to sit around here and waste our time. We got to make some cash and move into this market. So I've been very frank with everyone this time. Our goal for December is to make money, and then everyone will pay commissions, thus truly completing the business cycle of this project. And then the second stock was traded a few days later, giving everyone more preparation time. So if any of you would like to participate in next Monday's small cap stock project, please contact my assistant Kiki to register, and our team needs to collect the number of participants and their funds in advance to facilitate our scheduling. So please remember, we are not just trading for the sake of trading. We're making every trade a planned, logical, disciplined, and real world operation. And as long as you keep up, we have the opportunity to consistently generate profits every week, guys. Every week. All right. So, the next steps: delayed preparation and portfolio cleanup. So, this is going to deepen the justification for the Monday entry and emphasize the non negotiable nature of our portfolio. So, guys, the market has presented us with a clear choice, which is to compromise rhythm for speed or prioritize precision. And we choose precision, pushing the next pick to Monday. And this is my fiduciary justice, which I am going to instill upon all of my beautiful and lovely followers. And we are pushing the next core trade to Monday. And the delay is not due to fear, it is due to fiduciary conviction. So, guys, the Friday volatility trap. Friday's market is a high risk zone, and we don't want to be in high risk zones. We want to be in logical zones, if that makes sense, guys. So it's fold Friday is fold with institutional position adjustments and end of week sentiment chasing. End of week sentiment chasing. And yeah, guys, let me look on the daily. Let's change our chart again. Yeah, we can see our NAS is moving up nicely and a lot of volume is coming in. So these dynamics distort the quality of the volume, making it nearly impossible to confirm a clean glide or accumulation pattern. Entering on Friday means buying into a market designed to trap undisciplined capital and liquidity realism. We prefer to enter the market on Monday when liquidity is restored and the true underlying trends are easier to discern. So, we want our phase 1 to be the testing stage and to be executed in an environment where the data is clear and not chaotic. The delay is a strategic choice to enter when the structural advantage is minimized, even if it means sacrificing a day of potential trading. Even if it means sacrificing a day of potential trading. So, guys, open registration. The necessity of refined management. Since this delay grants us crucial preparation time, please sign up immediately for Monday's core pick, and please contact my assistant Kiki or Sophie to register. And well, mostly Kiki, guys. Contact Kiki. She is the real one to go to. Okay. And the sign up is not a formality, it is a necessary component of refined management for a team of our scale. Okay. And why? Why do you need to sign up? For what reason? For our structural positioning, we require precise numbers to assign to different roles. We got pioneers, we got accumulators, and we got supporters. And within our structured positioning system, there's individual planning. So the system that we have dictates different entry points and size allocation for different accounts. So Kiki needs your capital commitment size to facilitate this individual planning. So she needs your capital commitment size to facilitate this individual planning. And this system only works when coordination is perfect. And your sign up is a commitment to that coordination. Okay, guys, your commitment is a sign up to that coordination. And the non negotiable portfolio is a cleanup mandate. I want every single participant to perform a brutal audit of their brokerage accounts this weekend. Non negotiable. I want all of you guys to perform a brutal audit of their brokerage accounts this weekend. And if anyone is still holding positions that are not part of our system, any assets that compromise your cash liquidity or distract your focus, you must clean them up now. Okay, clean it up. Any assets that are compromising your cash liquidity or distract you from focus, clean it up. Get that out of the window, get it out of the way, because that is not what we want in our positions. A clean portfolio is a disciplined mind, and cash is cash is dry powder. When executing a precise, fast pace strategy, you cannot afford slip ups. You cannot afford slip ups, and you need to have capital tied up in a sub. You cannot afford to have capital tied up in a suboptimal asset. I don't want you to waste your money in a stupid stock that you don't need it in. Rather, just put it in with us, as we know what fund and which stock is ready for you. So go in light and ready for Monday's launch, as this is a non-negotiable fiduciary step, guys. Okay, it's a non-negotiable fiduciary step. Okay, so guys, I have been going live now for almost 50 minutes, almost 1 hour, well, 40 minutes to be exact. And I just need to take a 1 minute break, and I will be back with you guys in 1 minute. Okay, so let's just take a quick break. Let me go to our live and then see if there's anything that you guys need me to check out. Okay, so guys, let me put a 1 minute timer on, and I will see you shortly. Okay, guys, I am back. I got some info that you guys need a louder voice. Okay, let me turn it up. I hope that is loud enough. I hope you guys can hear me. And let's get going. Okay. And yes, guys. So let's get going back onto my markets. I hope my voice is louder now and that you guys can hear me. Okay. Okay. So, yes, guys, if you have any information, please go into our Telegram group, talk to anybody that you need help from, and our assistant Sophia, she will be able to help you. Okay. She is the lady for the duty, for the job that will get this thing going. Okay, guys. So, let's go to part 3 of our live stream. Deciphering the system and the architecture of profit. So, now we can proceed to the most crucial segment of this entire session, which is the deep analysis of the engine that drove our first successful trade. This is the full system that we must master, which is scaling in, a multi-account, scaling in, number 1, number 2, a multi-account, a coordination, and number 3, structured positioning. So we got pillars to these. Pillar A is phased position building and the problem of price impact. Okay, we've got price impact. Oof. Look at the S&P. Okay, it's holding in this resistance level right now. Let's see in the next 5 hours what happens. So, when dealing with small cap stocks, any concentrated buying order instantly creates a visible price that impacts us. And this visible surge is a signal quantitative flare to predators. Okay, it is a signal to predators. So guys, the solution is dispersal and concealment. We implement phased position building, scaling in by arranging 3 or more batches of order placements at different unit points. And the primary purpose is to disperse the trading and conceal the layout. We simulate a slow organic accumulation and we ensure that our entire capital deployment is masked within the natural ebb and flow of daily volume. All right, natural flow and ebb of daily volume. And this result will complete our accumulation phase without triggering algorithmic surveillance and without alerting major players, and most critically, without compromising our execution price by chasing a spike. So we are accumulating at a fair, low risk and a structural price. A fair, low risk and structural price. I hope that gives you guys a nice indication. Let me just adjust this to here. Okay. So we can see the Dow is moving up on a high. So this systematic patience is the first layer of our defense against market manipulation. So that is pillar B and pillar A. And pillar B is our multi-account coordination. We simulate the whale. We simulate the whale. So the problem of volume spike detection is that even perfectly phased orders, if they originate from a single large account, can still be flagged by the most sophisticated institutional volume monitoring software. And the solution is structured fragmentation, and we use a multi-account staggered timing structured order placement approach. So we use a multi-account, structured timing, and structured order placement approach. So we intentionally break down our team's collective large transaction into a series of smaller, seemingly independent buying actions across hundreds of retail accounts. And there is some deception to this. There is a little bit of deception to this. We can see the dollar going up and the Dow and the S&P spiking. So, to the external world, this appears as hundreds of individuals are making separate emotional buying decisions, but it is perceived as retail noise. And the reality is that it is a unified, coordinated strategy system which is executed flawlessly behind the scenes. And we are performing the precise tactics of multi-billion-dollar hedge funds, but utilizing the camouflage of the retail ecosystem. And we use retail accounts to execute institutional level trading behavior. Okay, so we use retail accounts to execute institutional level trading behavior. And this is the core of our tactical advantage, moving with the power of a whale while retaining the invisibility of a school of fish. So this is the core of our tactical advantage. We are moving with the power of a whale while retaining the invisibility of a schoolfish. Of a school of fish. So guys, pillar C, our structural positioning, the tactical hierarchy. So the problem of a single point failure, a simple unified strategy, which is everyone buying at the same price, is brittle and exposes the entire team to risk if that single entry fails. Okay. So the solution and hierarchy. So yeah guys, I got some Tesla open at the moment. The solution and hierarchy is a structured strategy which involves the coordination of different accounts, different position sizes, and different entry rhythms. It is not about equality of action, but precision of role. Okay, so it's not about equality of action, but precision of role. So, one thing that I want to talk about now is our pioneers. Our pioneers execute the earliest, smallest, high-risk entries, and they validate the structural flaw and test the liquidity response. So they execute the earliest, smallest, highest risk entries, and they validate the structural floor and test the liquidity response. And there are accumulators. They deploy the main body of capital only after the pioneers confirm the thesis. They solidify the trend and push the price into the confirmed glide zone. Okay, so they confirm the thesis of the pioneers and they solidify the trend and push the price into the confirmed glide zone. So guys, late day supporters, they execute smaller strategic orders to defend key support levels or maintain momentum before a close. So our late day supporters execute smaller strategic orders to defend key support levels or maintain momentum before a close. So this structured approach minimizes systemic risk because no single account or single entry point holds the weight of the entire operation. Only in this rigorous planned way can we minimize risk and maximize the potential profit to capture the main trend. Okay, guys. So now we have part 4 that we are going to get into, and we will see what else we will have to talk about. But today I have to talk about the Russell again and the information that I want to give you guys out at this moment. Let's draw some boxes. We got we got a nice support zone over here for our Russell. And our resistance zone is right here. Okay. We can add in our resistance level over here, which is, if it maintains this level, we know that institution is moving in, guys. Okay. So the Russell and the small cap focus. So this is a deep structural justification via the IWM chart, analysis, and other macro factors. So let's zoom in on our preferred battlefield, the small cap universe. Okay, the small cap universe. Tracked by the Russell 2000, we must explain the strategic choice by fully eliminating any perception of gambling. Okay, fully eliminate any perception of gambling, guys, which is micro rationale. The rate cut nexus is that we are focusing on small caps because the macro financial environment has shifted dramatically in their favor. It's shifted dramatically in their favor, and this is what we are looking at. And then there is also debt sensitivity. The small cap companies like the Russell 2000 index members are exquisitely sensitive to the cost of capital. So what does this mean? They rely heavily on financing when the market prices in expectations for Federal Reserve interest rate cuts or a prolonged pause, which is the cost of their debt, and the cost of their debt decreases and their future earnings projections increase dramatically. This single macro factor provides a fundamental re-rating catalyst for the entire sector. Okay, so the single macro factor provides a fundamental re-rating catalyst for the entire sector, guys. Let me just see if I can change this one a little bit more. Yeah, that's about better. Okay. So yeah, guys. Let me just see if there's anything else I gotta go through. Ah, okay, guys, just give me a moment. Just give me a moment, guys. I have got a phone call coming in, and this is a really, really important phone call, guys. I really just have to pause our stream quickly. I've got a super important phone call once again, just to let you guys know. I just have to pause the stream for a moment, and then I will get back to you guys. Okay, guys? So, just let me take this phone call, guys, and then I will be back soon with a message to let you guys know what we are going to do next. Okay, guys, one more time, I got a really important phone call, and let me just take this, and I'll be back shortly. Sorry, guys, just once again, I'm on a phone call and I'm getting a call, and I'll be back. Okay, guys, I got some important information. There's an update on the second core stock information. There's an update on the second core stock pick now, and I'll share the information with everybody in the Telegram group. Okay, so let me just repeat that, guys. There's an update on the second core stock pick now, and I'll share the information with everybody in the Telegram group, and I will confirm it all with you guys. Okay, guys. So this is going to be the end of the live stream, and let's all hop into the Telegram group. And I've got some really important information to share with you guys. Okay, this is Andrew Scott Whitemore, and I will be back with everybody. And if you are in the Telegram group, keep your eyes open.